Hi there, good morning and welcome. You're watching Chartbusters on CNBC TV18, a show where we highlight all the buzzing stocks of the day, get you expert advice on how to trade and capitalize on these stocks. All that packed in the next half an hour. I'm Mangla Malu. With me is Reema Tendulkar. Reema, we were, I don't know how to open this right now because we thought that there would be...
It's about declining stocks today. That's what we're going to get to in the next 30 minutes.
I don't know. If one tracks social media closely, Thursdays are usually known to be throwback Thursdays. And the way the markets have fallen right now, it is literally throwback Thursdays. The only thing one can say is that we haven't extended our decline from the morning lows. Still sitting about 270 points lower on the Nifty, about 850 points lower on the Sensex, 700 points lower on the Nifty Bank, 400 points lower on the mid-cap index. We saw a bit of a rally yesterday. Most of that has been taken off, and no further declines is the only thing one can say.
Yes, but you can't deny that it's a full frontal bear attack that the Indian markets have seen. In fact, even the rest of the global markets have seen. You plot the Asian market picture, the cuts are very, very deep. And on that mid-cap index point, you know, that Lata was also making, that while we are down about 2.5%, yesterday we had rallied about 3.5%. So if you compare it to the trade in, to the Tuesday's closing, in fact, the markets are still higher compared to Tuesday. So we've still not given up all the gains that we made yesterday.
Are higher compared to Tuesday's close. We also need to know that, from the start of October, we had seen a bit of a rally, from a bit of a decline. In fact, mid-September somewhere, since then when we saw the mid-cap index declining. From the start of October itself, that index is down 5%. So yes, it is higher as compared to Tuesday's close, but from the start of this month, it's down about 5% as well.
Okay, so that is about the mid-cap index. But if you look at the Nifty, I think the Nifty is down a little
about
less.
About 7% this month.
7% this month, yeah. So that's the extent of the carnage. We'll discuss all that and more. We've got big guests lined up as well. Before that, let's run you through the top headline. After the massive sell-off on Wall Street, Asian markets crumble in today's trade. Markets in Japan, China, Hong Kong, all down more than 4% apiece.
Indian markets too feel the jitters. Sensex falls more than 850 points. The Nifty sees a cut of over 250 points. The mid-cap and the Nifty Bank fall in line with the benchmark indices.
Aviation stocks buck the trend in an otherwise weak market. Lower crude prices coupled with a 3% excise duty cut in aviation turbine fuel supports the stocks.
IT major TCS trades weak ahead of the second quarter numbers. Today, TCS expected to post a good quarter. CNBC TV18 poll predicts constant currency growth between 4 to 4.2%. Dollar revenue growth seen rising 2.9%.
Zee Entertainment gains on the back of a strong Q2 performance with a big surprise in the domestic subscription revenue. Management ups the ad and subscription revenue guidance to high teens for FY19.
All right, the sort of route that we're seeing from yesterday's close, 800-point decline on the Sensex, nearly 650 points lower on the Nifty Bank as well as the mid-cap index. While if you take a look at the advanced decline chart, we opened with 13 stocks in the red for 1 in the green. Now those lines are coming closer. We have 5 stocks in the red, no doubt, and one in the green. There is a fair bit of distance, but we have crossed a fair bit of distance since morning as well. A bit of recovery on the Nifty, closing in on that 10,200 mark. Is that little bit of intraday recovery ripe for more selling, or maybe not? Let's go to Ashwini for his view on that. Ashwini, since morning you said that 10,150 has held on twice. Now we're at 10,200, 10,240 thereabouts is where you said rallies to that level should be sold into. At 10,200, what does one do?
See, the sense I'm getting is that we are outperforming global markets, and the reason is that the main thorn in our flesh, which is crude, is lower, and by afternoon, I think people on the short side will get surprised by the kind of upside we are able to see. So right now, get long on Nifty, Bank Nifty, shorts are trapped at lower levels, and right now everything is red but recovering. Because of this fall in crude, I think we should outperform greatly. If other markets fall 100, chances are we'll only fall 50. So get ready for some strong short covering to come in. Yesterday, the futures premium was flat even at a discount. Those futures premium both on Nifty, Bank Nifty are expanding. So 10,150 in my opinion is going to hold on, and you could get a fairly serious upside rally. See what happens 3 weeks from now, that we'll see. But what I'm talking about is today we reached strong supports. There's good reason to go up, and the people who are short in the morning, they're going to pay up by afternoon. This view can only get challenged if Dow futures down another 500. But if things start to recover, like Asia, Kospi, etc., is recovering a little bit, plus we have crude on our side, so crude sensitive, inflation sensitive, everything that was going down for the last 3 weeks is going to go up.
Okay. So on the upside, you would largely play the crude beneficiaries. Anything in the financial pack?
See, financials also, everything opened 5% lower, Bajaj Finance 8% lower. Things are recovering from their lows. So even if all banks say recover 1.5%, 2%, the bank Nifty would have recovered 200-300 points. So that is a call people need to take, because everything crude related, inflation related is so badly bashed up that my sense is that that could have a bit of a pullback while crude hangs around 81. So HPCL is a buy with a stop of 180, target of 192. Indigo is a buy with a stop of 770, target of 810. And Yes Bank is a buy with a stop of 223, target of 238.
Right, Ashwini, for the day you said that 10,150 remains a strong support. If the market does break that, there could be further lower levels, and short covering is on the anvil. That's for the day. But for a person who's perhaps looking at a slightly longer term, what are maybe weekly, 2 weekly or 3 weekly charts saying for the Nifty itself? We've seen a sharp correction from levels upwards of 11,000 to about 10,200. So from a longer term positional perspective, what would the technical call be?
See, till now, the issues were more or less local. But now with this global issue also throwing in its hat, there's no value in talking long term, because the stock prices will be so different that it'll appear like a different stock. Let the macros turn, both here as well as the US, in a rising rate environment. I mean, you don't fight RBI, you don't fight the Fed. If Fed is tightening, stock markets have had it. So do not make this mistake of getting long into a tightening market. That's the first sign of central banks around the world saying that okay, we are ready to cut, etc. That is the best time. Otherwise, you can easily fall another 5-8% on the Nifty, and nothing much would change.
Okay, Ashwini, thank you very much for that. So he's positioning himself for a bit of a short covering bounce, aided by the sharp decline that we've seen in crude prices. We will slip into a very short break on that note. Before that, let's get you some market opinion. Earlier today, we spoke with Adrian Movat. We'd also spoken to Ajay Srivastava to get a sense about the way forward for the markets and how we should approach this correction. Is there more pain ahead? Here are their views.
EM, it's generally been in a bear market. So I think really the question here for the investors in EM is, are we about to see a more substantial, sustained correction in US equities, which clearly would bring global equities lower? I think we're going to have a tough October. I think with regards to emerging market equities, year to date, the EPS revisions have also been quite negative. The premium of earnings growth in the US over EM is more than 20% at the moment. The question for EM investors is, how much confidence do you have in earnings growth going into 2019? And obviously at this point in time, EM equity investors' confidence is relatively low. Within EM in general, we've had a downward trend. Indian equities in local currency have been quite a significant outperformer. I would wait for some stability in US equity markets before deploying capital.
I think we just need to wait a while, keep the cash in hand. Your debt yields are not bad at all. And if you look at it now in hindsight, our 3-year debt yields are now becoming better than what equity has given. So I don't think so. This is a good time. You're getting 8% at FD rates. Sit quiet with it. Let this whole thing settle down, because India's festive season also is not looking very good at this point of time. So the triggers which were to buy are absent in this market, and there is no need to average out. If you've got banks, do not sell out. I think the banks are going to come out clear winners in all this chaos. Therefore, if you don't have banks, buy banks. If you have banks, stay put. You look at the real economy, nobody's feeling bullish. You saw the car numbers, two-wheeler numbers, auto numbers, cement numbers, steel numbers, Tata Steel numbers. Nobody is bullish. The volume increase are 2% and thereabouts. So I'm not sure where GDP growth numbers are coming from, but I'm certainly sure that the real economy is in a bear market. Forget the financial economy.